The FOMC meeting has concluded, the interest rate numbers are in, and the market has reacted aggressively. Here's what you need to know. How's it going, everyone? My name is Jake with Trade Confident, and today I'm going to be talking to you about the FOMC meeting that has just concluded with an additional 75 basis point interest rate hike, bringing us to a total of 3.75 to 4% interest rates. As I said, the markets have reacted very aggressively, seeing a huge spike and an immediate drop down. But before that, let me give you all the information you need to know about the interest rate hike itself. This article comes from Reuters. Fed jacks up interest rates again, hints at smaller increases ahead. The Federal Reserve raised interest rates by 0.75 of a percentage point again on Wednesday and said its battle against inflation will require borrowing costs to rise further, yet signaled it may be nearing an inflection point in what has become the swiftest tightening of U.S. monetary policy in 40 years. The double-sided message left open the possibility the U.S. central bank may raise rates at similar increments in the future, ending a sequence of 0.75 of a percentage point hikes as soon as December, in favor of more tempered increases of perhaps 0.5 percentage point, while also leaving policymakers room to continue pushing rates higher if inflation doesn't start to slow. Bill Nelson, a former top Fed staffer who is now chief economist at the Bank Policy Institute, said ahead of Powell's news conference that the Fed's policy statement appeared to set the central bank up for more rate hikes before its tightening cycle is completed, delivering at a possibly slower pace. The document implied that the Fed may be aiming for a higher medium-term level for the Fed funds rate than currently expected, Nelson said. Ongoing increases in the target range will be appropriate, the central bank policy setting Federal Open Market Committee said at the end of its two-day meeting. But in determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags in which monetary policy affects economic activity and inflation, and the economic and financial developments. The time to reassess the pace of increases is coming, Powell said. It may come as soon as the next meeting or the one after that. No decision has been made. At the Fed's September 20 to 21st meeting, the median estimate among policymakers pegged the peak Fed funds rate next year at between 4.5% and 4.75%. Rate futures market now imply even the odds of it climbing to 5% or higher next year. There you have it, guys. Our interest rates are now 3.75 to 4%. This is due to the 75 basis point interest rate hike that occurred today, and we could be expecting as far as 4.25 to 4.5, even as high as 5% in our interest rates as of next year. Fed Chair Jerome Powell has said that it is time to reassess the aggressiveness at which they are increasing the paces. He said the decrease in aggressiveness could come as early as the meeting in December or the next one after that, but no decision has been made so far. With that, let's talk about how the markets reacted. First, taking a look at the S&P 500 index on the one-day time frame here. From market open to close today, we saw the market drop about 2.5%. There was a small move up as the announcement happened, but again, it closed 2.5% lower than the open this morning. Looking at Bitcoin here on the 4-hour time frame, though, right here you can see the market reacted very similarly to the S&P 500. Bitcoin bounced off structure support and saw a huge move up, but it actually ended up dropping back down to break out of this rising wedge pattern. The candle closed down and the prices continued moving down from there. At this point, there is very little market volatility. Most people are out of the market at this point, so it's likely we will see continued moves down soon. Trend exhaustion and price versus well money flow are low on their charts on the 4-hour time frame, so it's likely to slow down for now. But on the one-day time frame, you can see they still have plenty of room to move down, with the price versus well money flow still in the middle of its chart. With that, we can expect continued moves down throughout the week. Back on the 4-hour time frame here, I have been calling $19,500 right about here to be the bottom of this little move. I've been saying that it will likely break out of this rising wedge pattern and fall down to that $19,500 level. Before that happens, though, we do need to break structure resistance at $20,000. But once that breaks, we are looking at that $19,500 support right here. We did get a pretty good sell signal here from the TC top and bottom finder on the 4-hour time frame after this spike happened. More than likely, again, we are going to continue falling. We may see a little bit bit of sideways movement here first, but I do think that the price is going to continue dropping down to at least $19,500. In conclusion, we got that 75 basis point interest rate hike that we were expecting, and likely we will see that aggressiveness drop, possibly down to 50 basis point interest rate hikes throughout the next year, as early as the December interest rate hike. According to Jerome Powell, we don't know exactly when the aggressiveness is going to stop, but they are reassessing the 75 basis point interest rate hike, so we can expect that drop soon. Until then, though, we can expect the bear market to continue until the inflation is taken care of, until that's under control and near their 2% rate that they've been going for. We can expect interest rates to continue and for the bear market to continue with that as well. In the short term, though, the general markets are looking bearish over the next week or so. I do expect Bitcoin to drop to $19,500 as long as we break this $20,000 support level. As that happens, we will be keeping you updated, so be sure to subscribe for more crypto content, education, and analysis. Before I end the video, though, I have to tell you how to get access to the indicators you saw me use in this video. These indicators are extremely accurate and have been helping our traders earn thousands of dollars. In order to get access, the first thing you're going to want to do is click the link in the description. That'll bring you to this page. In order to get the best possible deal, you're going to want to purchase the bundle pack first, and let me tell you why. In the bundle pack, you will get 9 indicators, including the price versus well money flow and trend exhaustion indicators you saw me use in this video, but the bundle pack will also include a $400 off coupon for the TC top and bottom finder. This means you can get both the TC top and bottom finder and the entire bundle pack. That means all trade confident indicators for less than just the price of this alone. Again, the $400 off coupon here will get you that crazy discount for the TC top and bottom finder. No matter what you purchase, though, you get lifetime access for a one-time payment and you get full dedicated support. So if you ever have any questions, feel free to email us at btradeconfident@gmail.com. With that, thank you so much for watching. If you enjoy this video, please leave a like and subscribe. Remember, trade safe, trade confident, and I'll see you in the next video.